Let's be honest, the affordable housing crisis can feel like a totally unsolvable puzzle. But what if one of the most powerful tools to actually tackle it has been quietly building momentum right under our noses? Well, today, we're going to pull back the curtain on that tool and see exactly how it's shaking things up. For anyone who actually tries to build affordable homes, the starting line is just brutal. Making the numbers pencil out is a complete nightmare. You've got developers navigating this maze of sky-high costs, constantly shifting policies, and a subsidy system that's just full of gaps. It takes this incredibly complex patchwork of funding to get anything done. It's so hard, in fact, that people build their entire careers on just figuring out how to work the system. So, right in the middle of all that chaos, what does this number mean? 198%. It represents a massive, massive surge, a huge shift in how we're starting to fight the housing problem. But a surge in what exactly? Okay, that 1,980%, that's the growth in housing-related municipal bonds issued just since 2016. It's a financial tool that has, kind of quietly, become one of the most important and scalable ways we have to fund affordable housing. So let's break down what that actually is. Think of it this way. A municipal bond, or a Muni for short, is basically you, or any investor, lending money to a city or a state. In return, they promise to pay you back with interest. And they take that money and use it for public good projects, in this case, getting more affordable homes built. It's a pretty simple idea, but the scale is just massive. Now, to put this growth into perspective, these housing bonds now make up about 7% of the entire municipal bond market. And while 7% might not sound like a whole lot, you got to remember the total market is worth a staggering 4.4 times trillion dollars. So yeah, that's a huge amount of capital being channeled directly into housing solutions. And this funding isn't just spread out randomly across the country. Nope, it's concentrated right where the crisis is hitting the hardest. Nearly 1 out of every 4 of these housing bonds are issued in just 2 states, California and New York. I mean, they're on the absolute front lines of this affordability battle, and they're using this tool aggressively because, frankly, they have to. All right, so that covers where the money's going. But it brings up another really important question. Why are investors so eager to put their cash here in the first place? Let's follow the money and figure out what's motivating them. I mean, it's a totally fair question, right? With all the things you could invest in, why this sudden huge rush into housing bonds? Well, the answer is this really compelling mix of great financial performance and, a sense of social purpose. First and foremost, the returns are just plain strong. Look at this. Over the last year, the housing bond index delivered a return of over 5.5%. That easily beats the broader market, which came in around 4.4%. Simply put, they just performed better. The numbers don't lie. And it's not just about the final return at the end of the year. The yield, which is basically the steady income you get from the bond, is also consistently higher for housing bonds. This means that steady stream of cash flow is just more robust than what you get from the overall market. For big investors, that more fruitful return makes a huge, huge difference. But the appeal here goes way beyond just the raw numbers. Investors see a ton of stability. You've got strong policy support from the government, which, lowers the risk. Plus, there are often chances to make a little extra money based on how the loans are structured. But honestly, maybe the biggest X factor is making a tangible community impact. Your investment is literally building homes for people. It's that super rare win-win. You can do really well financially while also doing some real good for society. Okay, so we get why investors are piling in. But how does a financial instrument that's sold on Wall Street actually become a physical home on Main Street? Let's trace that path from a bond all the way to a building. So bonds are a super powerful ingredient, but they're not the whole recipe. The process usually kicks off when cities or states pass reforms that encourage more housing. That's what unlocks the ability for developers to then combine the financing from these tax-exempt bonds with other tools, like the low-income housing tax credit. And that's a big one. It gives investors a dollar-for-dollar cut in their federal taxes. It's this layering of incentives that finally makes a project financially doable and lets them break ground. And this really shows you just how flexible this whole approach is. It's not a one-size-fits-all solution. There's a whole toolbox of different bond types. For instance, some are designed specifically to help first-time homebuyers get their mortgages. Others are used to finance these huge multifamily apartment buildings. And now we're even seeing newer types created specifically for essential workers, folks like teachers and nurses in really high-cost cities. And if you want to see this in action, just look at Chicago. The city authorized a massive $1.25 billion bond just for housing. A key part of their plan is to use that money to transform unused public land into what's called missing middle housing, things like duplexes and townhomes that are so often in short supply. This is a major city using this tool at a huge scale to solve a very specific problem. Now, it would be really easy to see all this and think, great, we found the magic solution. But, and this is a really big but, it is crucial to understand that while bonds are an incredibly powerful tool, they are not a silver bullet. They can't fix everything all by themselves. Think about it. All the money in the world from a bond can't get past a restrictive zoning law that just says you can't build here. It can't magically speed up a permitting process that takes years to get through, and it definitely doesn't lower the crazy high cost of lumber and labor. In fact, using bonds adds its own layer of complexity and compliance that developers have to deal with. So the key takeaway is you have to fix these other fundamental problems for the financing to really be effective. You know, this quote from a developer, Charles Sims, really just hits the nail on the head. It sums up the central tension perfectly. Is it difficult? Yeah. Is the compliance a heavy lift? Absolutely. But the outcome, the public benefit of creating more homes for people who desperately need them, is worth the struggle. And that leaves us with the big, lingering question, doesn't it? We have this powerful, growing financial tool that can make a real, tangible difference. We also know it comes with its own set of hurdles. So the real challenge for cities and states moving forward is this. How do you streamline the process and balance the complexity of these amazing tools with the incredibly urgent, desperate need to just get homes built? That's the puzzle they're all trying to solve right now.